All right, welcome back, everybody. This is going to be the daily recap for this Thursday, May 11th, 2023. As I mentioned in the morning show, I said I'd go over just a little bit about the concept behind the Einstein formula that you see me using every day. That provides me with high probability price targets. But before we do that, please don't forget to subscribe and hit the like button. Also, if you'd like to keep up with my latest videos, also hit that notification bell and you'll be the first to be notified when any new videos do come out. Alright, so the concept behind the Einstein formula. Now, my intent is not to get into the actual details of the Einstein formula, but give you a little bit better idea of what is the whole concept behind it and why I think this is probably one of the best tools that we've been able to develop in my last 40 years of trading, and I'll tell you why in just a minute. But anyway, let's talk about the concept. What's the concept? So, the development of the Einstein formula stemmed from the idea that by knowing the velocity, the velocity speed of an object at the time of observation, we can predict its future travel distance, assuming the conditions at the moment are the same as those preceding the observation. All right, this may be a lot to think about here. I know it may be a little confusing, but you really may have to read it several times to think about what we're saying here. Okay, so however, since future conditions cannot be predicted with absolute certainty, our observations indicate that the conditions remain unchanged approximately 70% and greater. Okay, so to really get that into perspective, I'd like to compare it to a vehicle that's traveling down the road. All right. And so basically what you have is, and this can be calculated. Of course, we know, insurance companies use this all the time for collisions or whenever there's an accident. These formulas are used. Our formula is different, so it's not the exact same formula, but it's been modified for price movement. But this is just an idea to kind of get the concept of what we're looking at. All right. So basically, it's like two vehicles traveling down the road at 65 miles per hour, assuming the road conditions are exactly the same. So it's not raining, not snowing, assuming that they both have, fairly new tires and all of that. Well, the car that's going 65 miles an hour is going to be able to stop a lot shorter distance than the truck that's going 65 miles an hour, assuming they both slam on the brakes at the same time. It's going to travel further than the lighter car simply because of the weight of the vehicle, even though they're still going at the same speed. So when we look at price movement, think of it as price is similar to the car going down the road. Speed is basically the price distance traveled. So in other words, how much has price moved from any particular point in time? Okay, that could be a pivot point. It could be all types of things. Okay, but you have to have a place of which you start your calculations, or the distance that price is beginning to travel from. And then, of course, the vehicle weight, let's think of that as volume. Okay, so the beautiful thing about the Einstein formula is the fact that we can use this in all markets. It doesn't matter what the market is. I don't care if it's a commodity, stock, an indice. It could be anything. It could be Forex. Anything that has price movement, we can apply this formula to it. Okay? And when we do, our history has shown that when we predict a distance in price traveled, we're going to be right over 70% of the time. So you're never going to hit 100%. So just like if it was raining, right, for these vehicles, then these distances are definitely going to be different than under the ideal conditions, right? So if you recall what I said, is at the time of observation. So if all conditions are normal at the time of the observation, so that means everything, there's no big news in the market, there's nothing like that, then we're going to be able to predict with a fairly high degree of accuracy just how far prices are going to go. Now, can they go farther? Absolutely. But there's other things involved that could project it to a further distance. Or in some cases, maybe it doesn't go as far. Just like the vehicle going down the road at 65 miles an hour, what happens all of a sudden? Somebody pulls in front of them. That's going to cut down on that distance, right? Same with the truck. So that is going to be the unknown. You will never know that. But when you're hitting above 70%, you're way ahead of the curve. Now, the other thing that's always been true about trading, and many of you may have heard of this. If you're new, maybe you have not, but it's always been said that getting into the market, in other words, placing a position, is always the easiest thing to do. Hardest thing, and it always has been, is knowing where to get out, right? That's always been a huge issue. Einstein formula solves that problem. That's a huge problem, okay? And that's the beauty of Einstein. So when I'm using my patterns give me high probability entry points. But then putting on top of that Einstein, which gives me the high probability exit points, okay, that's really all you need. That's why I'm saying you don't have to get into all these different indicators and everything else that everybody's using out there. It's just understanding price and how it moves. Getting in is easy. Getting out has always been the hardest. Einstein resolves that issue. That's why I believe these two tools, the combination of the behavioral patterns and using Einstein, is the strongest thing that I've ever observed, okay? And it's the most accurate, okay? These two things are the most accurate I've ever traded in my 40 years of trading. And the beauty of it is, once again, is it's universal. I can use this in any market, all right? So, and I don't have to worry about tweaking it. So I believe in it because I understand the concept in it. So I wanted you to get the idea of, we're not just drawing lines on the charts and saying prices are going to go there. We're not saying it's going to go to this support area, or this resistance area, or this Fibonacci number, and all that crazy stuff. There is a math behind price movement. All right. So that being said, I hope that makes a little bit more sense to you. And so why don't we get in and take a look and see how we did for the day. All right, so here we are. So we're going to take a look first at what we did with some of these commodities. We were trading the E-mini S&P. If you recall this morning, we were trading gold, and after the first hour, we did a little bit on the yen. But I wanted to show the gold because this is really important. All right, so first of all, gold. Pretty much just a classic setup, HF2 short. HF2, once again, is going to be one of those patterns we mentioned earlier. And we had two levels down here. First level came in right here. I went ahead and I took my profit at that first level. Once again, this is an Einstein level. Both of these are Einstein levels. But when I'm trading gold, if I'm trading the E-mini or any of the indices or Forex, most of the time I'm going to go for this very first target, all right? And there's a reason why I do that, but it's not because I have to do that, all right? It's just that because of the way they move, I don't like to hold on too long. And so I'm typically going to go for the first target. That first target's usually going to give me some pretty nice profits anyway, so I'm only going for the very first profit. Now, the reason I wanted to talk about gold is because there's this idea, and I see it all the time, and it's something that a lot of people get really confused about, and I wanted you guys to really think about when you're trading some of the tools you guys are using. When you think about it in a logical manner, doesn't make sense. Let me explain what I mean. I see so many day traders, they look at different time frames. So let's say you notice that on the daily chart, the market's going higher. So a lot of people then look at a 4-hour chart, 60-minute chart, 30-minute chart, a 1-minute chart. And the idea is that somehow by going into the deeper time frames, all of a sudden, that's going to give them a high probability of success of being a buyer because all different time frames are lining up. And unfortunately, it doesn't work that way. In fact, it's just the opposite. Typically, when you do that, you're typically buying at the very peak of the move. And most of your movement is going to be right at the beginning of a move, not at the peak of the move, not at the high of the move. That's where most people are going to end up losing money. So I wanted to explain that into a little bit more detail so this completely makes sense to you guys. Being day traders, the trend is not your friend. Momentum's your friend when it comes to day trading. So when you're thinking of day trading, I'm hoping that I can get you guys to stop thinking about trend. All right. And I'm going to show you an example that hopefully this will make sense to you. So let me pull up. Okay. So this is a daily chart of gold. All right. And I have these two red vertical lines here. So let's say that you had some magic formula, crystal ball that said on this particular day on 11/3, we were going to see a bounce and it was going to go all the way up to 2nd of March. All right. So long time frame, but you knew this crystal ball of yours told you 100% you knew that it was going to go from here all the way up to here before it had a nice little pullback. Okay. Well, first of all, this doesn't even exist. All right. So think about this. Even if it did exist, I counted the number of days in here. There's 61 days. All right. Of those 61 days, 25 of those were down days. Okay. So what that means is that only 36 of them were up days. So what is the math? We'll do the math. So if you take 61, okay, and you minus 25, you get 36. Then if you divide 36 by 61, you get 59%. So less than 60% of the time, okay, less than 60% of the time is any particular day going to be an up day. All right. And that's assuming you knew it was going to go from here all the way up here. But yet you're trying to identify this, which can't be done. That's going to go that far. And you're using all these different time frames, but only 59% of actually were up days. All right. So please understand what's going on here. This is never known. So if you don't even know this, do you think your probabilities are going to be even greater? You don't even know this, that it's going to go from here to there? No, of course not. That's in a perfect scenario, and you're still only going to be, it's only going to have 59% of the bars are going to be up. So the point I'm trying to make is when you are a short-term trader, it's not the trend, folks. It's the momentum, all right? And this is a good example today in gold. Everybody says gold's going higher, gold's going higher. But we had a beautiful trade on the short side because the pattern set up. It's all about behavior, folks. These are behavioral patterns. The behavioral pattern sets up, says this market is getting ready to go down based on what we've seen in the way that behavior is expressed in price. And then Einstein bases and does his calculation. It says, okay, all conditions being normal, all right, then we should see price come down to these two targets. It's really that simple. I don't have moving averages in here and trend lines and looking at Fibonacci numbers and support and resistance and Gann and all this other nonsense. It's very, very simple. And what's the advantage to that? If it's simple and you understand the concept behind it, you believe in it, you're more likely to stick with it and trade it. Plus, it's a lot less stressful because you don't have to make a whole lot of decisions. Basically, is a pattern set up? Yep. What's the Einstein says it's going to? And that's pretty much it. Okay. It's a lot easier way of trading the markets. People make it way too complicated. But the point I'm trying to make here is whenever you trade, whatever you're using, ask yourself, what's the logic behind it? Okay. Why is a 21-day moving average better than a 15-day moving average? It's not. It doesn't. It may be for a few days, but over a long period of time, it won't. Something will change. Okay. That tells us nothing about how markets move. Okay. They don't move in averages. It's not what makes prices move. So think about what you're doing when you are trying to short-term trade. All right. So anyway, not bad overall between the E-mini gold and the N711. Let's take a look at stocks today. And I used the same concept I was using yesterday. I mentioned I was going to go in, I was going to nibble and get out, try to trade several here and there and just nibble out a little bit at a time. And you're going to see you don't have to put on a lot of size to do well in trading, all right? Particularly when you're using a couple really reliable tools. Hold on one sec. Let's see. Let's get over here and let's take a look at our stocks. All right, so let's look at our trades today in the stocks. Once again, was just kind of nibbling away. A little bit of everything today, once again, just like I did yesterday. And you can see you don't have to go crazy with size, guys. Just try to stick with those targets. So anyway, first trade I made this morning during the first hour was GFAI. I wanted to show you that because I bought here at 911 and I marked it as an HF1. I'm pretty sure that was an HF1. I'm not 100% sure, but I'm pretty sure it's an HF1. I'm too lazy to go back and look at the video, but I think it was an HF1 setup. But nonetheless, I had these three price levels, if you remember from this morning. Once we went through level one, it didn't hesitate, okay? And this is 1 minute chart, folks. It went through 1, 2, and hit my third level. When it hit my third level, I went ahead and I got out. Now, why didn't I get out at the first level? Because it was moving so fast. Why should I? Let it run. Let's see what it can do, all right? I did not wait for a pullback, all right? Once it hit level number 3, that was it for me because it went beyond what I was expecting it to go. All right, I had really good probabilities. I knew I was going to get up to at least level 1. All right, and that's been the way I've been kind of playing these short-term trades. But when it hit level 1 and exploded all the way up to level 3, I went ahead and I took my profit and still ended up very nice on GFAI. Everything else is pretty much the same. CTIC, I traded out the other day and once again did nothing after entry. The biggest trade was NNOX. Now that was at the end of the day. Okay, so it was an HF1. I'll tell you what happened. It was an HF1 at the end of the day, literally right before the close. I think it came in about, I don't know, maybe 4 or 5 minutes before 4 p.m. Eastern time. It was strong. I went ahead and I jumped into it. I liked what I was seeing in terms of the buying pressure was coming in. Good volume, good spread on the bid and ask. I mean, everything was there. So I got into it and I got out after hours. I don't think I was in that trade more than maybe 10 minutes at the most after hours. But so I went ahead and got out after hours and it just turned out to actually be, I didn't expect I was going to make that much on it, but it just exploded. So I got out and made a nice little $640 on NNOX. Besides that, overall, nice day. Like I said, I just kind of chipped away at everything else. Jumped into JDST again a little bit today. Made 101 on that. That was a nice little trade. That's my favorite. So I chipped away a little bit on JDST and everything else was just, pretty much in and out. All right, that's it. Hopefully, I shared some information today that will make a little bit more sense for you that like to be short-term traders, scalpers, day traders, whatever you want to call us. And if you have any questions, please feel free to contact me via my website, innovativetradingstrategies.com. Also, if you'd like to learn more about the behavioral patterns, you can find that on my YouTube channel. I have, I think, over 1,000 videos now, and there are some there regarding the behavioral patterns. I think it's under the education tab. So if you go into that playlist under education, I believe there's several in there regarding the behavioral patterns. All right, that's it. Everybody have a good day. And tomorrow's Friday, so we'll wrap it up tomorrow. But hopefully we'll see everybody first thing tomorrow morning, 9 a.m. Eastern.